Hey folks, how you doing? Welcome to Coffee Talk Home Edition. This time I'm here with my buddy, Michael Brindle. He is the guy that is a mentor for me at my mortgage company, American Mortgage Services. Go ahead, Mike, say hi.
Hello. Go Bulls.
It's got the first game tonight, I believe.
Yeah, first game tonight.
I love it.
Boise State.
So let's just get into exactly what your title is and what exactly you do.
I am a mortgage loan originator, as the government likes us to call it. Basically, an old school name would be a mortgage broker. A lot of people know it more so by that name, but we are titled mortgage loan originators at this time.
So basically, I have him here just to kind of talk briefly. He is definitely more experienced than I am with all this. And I have him here just kind of briefly talk about some things that may help you folks when you decide to own a home. So let's get into a little bit about your job and more specific. Let's talk about the good, the bad, the ugly. What is one good thing, one bad thing?
Well, let's start out with the good. The good is helping people get in a home. People want to live in a house, move their kids in, move their families in. Maybe it's for a certain school zone. Maybe they've moved from New York and they're just settling back down here in Florida, in another state, coming down for some warmth, as a lot of northerners do anyway. But getting my driving force, obviously I need a paycheck.
Yeah.
So I have to
Everybody needs a paycheck.
Have to do something. But and one of the reasons I in particular go to my closings is because I like to see people get handed their keys. I like to see the smiles. I like to know that people are moving their families and their pets and their whole lives into a new home, and they're excited about it. And obviously the mortgage process, no matter how you spin it and no matter who the broker is, it's not fun for people. It's not terrible. And a good personality in a broker can make it fun, a little bit more fun.
Yeah.
Jovial, make jokes, have a good time with it. But overall, getting your doc stamps, getting your pay stubs together and your W-2s and bank statements and having somebody go through them is somewhat of a stressful process. But we do the best we can to make it unstressful or less stressful. And the fact of the matter is, at the end of all the stress, there's a pot of gold at the end of the rainbow, which is they're now getting into a new home. And hopefully it's one they love.
Let's pause right there with a lot of that good. Very first thing I want to bring up is you mentioned getting into a new home. That is the pot of gold. Why is that the pot of gold?
Why is that the pot of gold? Because it's in most cases, it's a step up in your life. It's going from an older house or a smaller house to a bigger house. Sometimes for older folks, it's going from a bigger house to a smaller house. But whatever the reason is, whatever their reason for moving from one place to the other is, whether they're transplanting for work or they're old people moving into a smaller house or young people who are having their first child and are moving into a bigger house, there's a reason that they are moving. And sometimes it could be something as simple as they want to have a pool. They want a pool home. They want to have a place to entertain outside. So
it's growth. It's growth in your life.
Is it a pot of gold? No, not quite a pot of gold, but there's something good at the end of that trail of doing all the paperwork and being asked a lot of questions, which when we start out, it's somewhat invasive. Not everybody's comfortable with it, and I try my best to make everybody comfortable. And again, being kind and being real and honest is a huge part of it. And then, like I said, at the end of all the hard work and the stressful part, it's good to see them get their keys. It's good to see them get their house.
So I mentioned this in the last episode, and we talked about it briefly, where a person's job is something that you do in order to make money, but the joy of it all is be able to build that relationship and be able to enjoy it. He mentioned pot of gold, and I'm going to actually state a little bit more in depth into it from my point of view, which is this. Having a home probably has a higher growth rate. I believe this fact is true. Don't quote me on it, but you guys are more than welcome to Google it or ChatGPT it. Has a higher growth rate of owning a home and receiving equity and profit in that than it would be in the stock market, your 401k, or your IRA.
Well, in a lot of cases, yes. Depends on how the market is growing or diminishing.
Would you say on an average basis?
On an average basis, yeah, you're gonna go north. If you invest in Nvidia or something crazy, then yeah, that's going to be better.
GameStop.
That's going to, or GameStop, or whatever the other ones are. Tesla. If you got in those low, yeah, you made a higher percentage of return than most people do on houses. If you go back to 2021, when everything blew up there around COVID, I mean, if you bought a house in 2020 or 2021, yeah, you probably did as well as you would with a big stock, because a lot of people's houses doubled from then till now in value, or at least 75% increase. So it was a great investment. Things right now are a little bit more leveled off. Obviously, that's due to the economy, that's due to interest rates, and we just have to wait and see what's going to happen. But ultimately, I think those rates are going to come down a little bit. Some people are going to climb off the fence and start buying houses again, and those values are probably going to get pumped up just a bit. Hopefully we don't have too many bidding wars like we had before.
No, not at all. I hope it to be a little bit more average of a market instead of being so risky like it is
That's
now.
part of what caused the problem was all the people overbidding on houses, buying a house for $500,000 and go, no, I'll give you $550 just to outbid somebody else, and then the appraised value of that house, the next time somebody goes to sell a house, they're charging $50,000 more for it because one guy paid $50,000 more for the house, and that's what it shows as the sale price, and that's a comparable to the house next door or down the street that's similar. And if that one's $50,000 higher, all of a sudden the values are inflating, and they're not inflating naturally.
No,
they're
not according to the market average.
All right, so we really don't want the people outbidding each other. We want a pretty even but fair battle for, you're going 5,000 over, a couple thousand over, doing stuff to beat each other to win the deal. If it's a multiple offer situation, then I just lost my train of thought.
You're all good. I'm gonna pause you there anyhow. Once again, I say that a lot, by the way, pause you right there. That's just kind of one of my phrases. Taking a step back to the question that we originally asked, talked about was one good thing about your job. I want to relate that back to everything you even just discussed. It's really about building a relationship. One good thing about our job, we actually get to see people to be successful with their home and to make equity off of it that hopefully in the future they can use for retirement, for downsizing, for putting into remodeling and adding things into their home that they want. And one of the key words he kept on saying was relationship stuff. Yeah. He talked about going to closing. He talked about, making this process as meaningful and as harmless as possible. He talked about all that, which deals primarily with what you folks need to look for in a mortgage loan originator, mortgage loan broker, however you want to word it, is you need someone that's going to relate to you. You need someone that is going to be there to actually help you. Mm-hmm. So moving on from that fact,
one real quick thing.
Go for it, sir.
and it is, you're correct. One of the great things about being a mortgage loan originator or broker, or however you want to call it, is the fact that we build relationships. I mean, some of my close friends are the realtors that I work with, and go to barbecues at their house. We've gone on little mini vacations together. We've done all kinds of things together. And when you build that friendship, obviously they trust in you, so they refer you out. But it is the friendship that you get, and when you take care of somebody and you get them to the finish line, you get them closed, and they're happy, they get their keys, you get that moment where you feel good about what you did, and they feel good about what you did, and they're going to their house. That's a great thing about the business, and you actually formulate a relationship with them. So, I mean, there was one year I got invited to like 18 Christmas parties by different clients, and obviously I can't go to all of them. So I didn't go.
Impossible.
I didn't go to any of them. Bad guy. But I had my own company Christmas party and another company Christmas party for somebody else, and my girlfriend's company Christmas party. So I didn't have time to go to their parties. So I said no. But the fact of the matter is, they were interested in having me there so they could introduce people to their mortgage broker, which probably Probably would have been a good idea in hindsight, but during Christmas, you got a lot of stuff going on.
You got your own family and everybody else to worry about.
That'd be too much.
So a little bit of the meat of the subject matter in reference to today in the present is basically what is the one thing with the market and everything right now that your clients need to know? What do they not need to be scared of? What do they need to know how to step around with high interest rates and so on and so forth?
You need to know to not be scared to buy right now. It's actually a good time. And one of the reasons is when the rates do come down and people come off the fence. We've got tons of clients that are just like, I'm just waiting for the rates to come down. Well, at some point, the rates are going to drop a half point and people are just going to start climbing in. The values very well could start rising. So yes, you may get a half a point lower in interest rate, but if the house is another $75,000, $80,000 higher, you just lost what you gained by the lower interest rate. So it's not a bad time to buy. It's actually a pretty good time to buy, and it's a buyer's market. Buyers can ask for closing costs to be paid. They can ask for repairs to be done. So for the past few years, it's been a seller's market where the seller can just say, no, I'm not going to help with closing costs. No, I'm not coming down on the purchase price. No, I'm not going to fix things. Take it or leave it. If you want it, take it. If you don't, I'll move on to the next buyer. So right now, it's a buyer's market because houses are not moving as quickly, which makes it a decent time for people to buy and a decent time, or actually a great time, for you to ask for the extras, like having your closing costs paid by the seller or a portion of them, having repairs done that a couple years ago they wouldn't have done. Fresh coat of paint. I've got one client right now who wanted one of the bathrooms in the house redone. It's a $8,000 repair. So, but they had already done the master bathroom and they wanted both bathrooms done at the same quality. And they said, if you fix that bathroom up, which is $8,000, I'll take the house.
That's a win in my book.
And yeah, it's a win. They actually got that in, and the seller put in $5,000 towards their closing costs. So they got basically $14,000 or $13,000 off the deal. They got a brand new guest bathroom, I guess, if you will, or second bathroom. So it just shows you that you can ask for more in this market. So that makes it a good time. And the fact of the matter is, if you buy now, the rates, obviously none of us have a crystal ball. If I had a crystal ball, I'd buy all a house. Or I'd win the lottery and then I'd buy everybody a house. But when you don't have a crystal ball and you don't know the future, and obviously Washington, D.C., there's stuff that's up and down, there's tariffs, there's all kinds of stuff going on in the world, and that affects the markets. But people in the know, big names, I'm not going to mention big names, all predict that the rates are going to come down to around 5%. It may take a year, it may take 2 years to get that low. But even if it comes off, you know, when it gets down 1 point, if you close right now at 6.25, 6.375, and you can get 5.375 a year later, or maybe even a little bit lower, you're going to lower your payment by $200 or $300. So as long as you can hang in for a little while, you're going to do well buying now. The other thing is there's some programs out there, buy down programs, in which you can get the rate lower. The seller pays for it as part of, like, seller paid closing costs, and you can basically get the rate down almost 2 points. You can get it down 2 points for the first year, 1 point for the second year, and then the third, it goes up to the full amount. So say, for example, say today's rate 6.25, you can start at 4.25 for the first full year. Second year, you're at 5.25. Third year, you're at 6.25. You're at today's rate. The whole point of it is that hopefully the rates will be down 2 points or 1.5 points. Cut that. The rates will come down a full point or more, and people will be able to they'll be able to lock in at that time. So I'm messing it up. If you're 2 points down and then the rates come down a point, when it goes to the 1 point, then you refinance and you lock into the 30-year fix, and you've got that lower rate for as long as you want to keep paying it.
to kind of revisit that, basically, just to give some solid numbers, let's say the interest rate right now is 7%. It's somewhere between 6 and 7, depending on what kind of program you're getting. So let's just say basic number, you're 7%. What he's talking about is that with this buy down, you can start off and go ahead and start from there. Basically, if you got a loan today, you could do a buy down with like an ARM style and do what would be 5 point.
It's not even an ARM style. What it really is the best way to explain it is it's called a 2-1 buy down. There's also a 1-1 buy down, which we're doing one right now for one of my clients. But you start out 2 points below. So just say the rate's 6.5 today. You start at 4.5 the first full 12 months. You're making payments based on 4.5. Second year, you're paying 5.5. The third year, you're up to the full interest rate of the time that you close the loan, which would be 6.5. So you've got 2 years of time to be able to refinance, to wait for the rates to go down and then refinance and lock in a better rate at that time.
So in theory, at the end of this buy down program, you should be able to refinance and you'll be right back to the interest rate that you started with. In theory, based upon what they're saying with the rates and how they're going to.
In theory, yes. But of course, in theory, the rates go down. That's when you're going to lock in before it gets all the way back up. Now, we're all assuming it's going to go back, that it's going to, the rates are going to come down, that you can do that. Again, no crystal ball, but all signs lead and point to that happening.
Do me a favor real quick, adjust your mic for me, point it upwards. Maybe you guys can hear him better. I'm not sure if you can hear him at all, but we'll find out in editing. So,
Mike's mic.
Test 1, test 2.
Test one.
To go back to what we were talking about, I think it would be accurate to say that the market that we have right now is what you would call a value market. A value market meaning that your everyday monthly payment definitely has some flexibility to work with it. It also has some flexibility with the actual physical home that you're doing with. You may have a better chance now to get more value out of that home instead of feeling like you were stuck in that home. I think that would probably be the best word to describe this market right now.
Sure.
So kind of moving on to some funner stuff. We are actually here in Winter Garden, Florida.
Beautiful Winter Garden.
Absolutely gorgeous. We got the background behind us. We are outside of the Plant Street Market. I wanted to talk about the main part of this show, which is coffee. What are you drinking, Mike?
Right now I am drinking an iced latte.
Where'd you get it from?
Axum.
Local
Axum
place,
coffee.
right here in
Local
Winter
place,
Garden.
yeah, right here in Winter Garden. Absolutely wonderful coffee.
I am drinking a chocolate mint, don't even tell you the word, Rooibos. Rooibos, there we go.
It's an African red tea.
Delicious,
with,
caffeine-free.
Caffeine-free, but it's very good iced.
I actually got it from a local place as well. It is called Antiquities, Teas spelled with T-A-S, right here in Plant Street Market. We're having a blast talking to you guys, helping you out. Hopefully, we can get you guys some answers to a lot of your questions. What else do we want to talk about?
And always remember, if you have questions for either of us, reach out. We're glad to answer them.
100%. All that information will be listed right below in our YouTube channel and on all our social media links. So yeah, is there anything else that we can think of for the moment to maybe help them out? I know this is a scary time for a lot of people with mortgages and loans. Or should we just cut it there?
Just kind of a recap. It's not that scary of a time. It's actually a good time, again, because when everybody gets off the fence, think about, what is it called? Something in demand. What is that?
Supply and demand?
Supply and demand. So
Basics
right
of
now there's houses out there, so you can get them pretty easily. I mean, you can put in an offer. In most cases, a buyer is gonna win as long as they're asking for whatever they're asking for within reason. But now I lost my train of thought again.
This happens a lot. He's a talker.
Yeah, I go
with buyer and seller's market. The supply and demand is basic. It's the basic definition of sales in general. So when you have a high supply and you have a low demand, that means the cost is lower. i.e.
Correct.
the value is lower depending on what you're talking about. It could be toilet paper to water bottles to houses to cars. If a car lot has a lot of cars on their lot, what are they going to be more willing to do?
They're going to be willing to sell them at a cheaper price to move them.
Yeah, because car dealerships say they only want it on their lot no more than 30 days. Same thing that happens with houses. They want to move.
Yeah, they're not in the habit of hoarding.
So that's kind of the recap of the market right now and kind of everything that's going on.
Absolutely.
And that's the knowledge that we can give for you folks. I am a mortgage loan originator. He is a mortgage loan originator. We work together. Once again, he is my mentor. I think we were going to wrap it up there. You guys didn't see because I had it done the wrong side and the wrong hand, but I'm repping the Friends Show, Central Park. He's got the USF
Cheers.
Going on. We are Coffee Talk Home Edition. Once again, please subscribe, please like, please share. We are here for you folks. Any questions you have, please leave it up to us. I have experts in every field that deals with the home that you can think of. We will get you the answers. Yeah, we look forward to you on the next show, and I think I'm going to try to have either a handyman or an AC guy come out and kind of give you some insights on how to help take care of your home and maintain it for whenever you do buy those homes from us. And I will reiterate one last thing that I almost forgot about. Don't forget, when you go to purchase a home, your very first step is to get pre-approved by a mortgage loan originator.
Correct.
It is not to find a realtor. That is a misconception in the market and in the world. So that is about it. I appreciate your time, Mike. We're out. See you guys later.